Hey everybody, Courtney Smith here, and I want to talk about how the next big move in the stock market is down, not up. We're currently in a bull market in the stock market and have been for 18 months. It's been a mammoth bull market with the S&P rallying 41% from the COVID low just a little over a year ago. That's an incredible bull market in a short period of time. But the next 41% will not be higher but lower, and we need to start preparing for that move. The big money is made on the big move, and the next big move is down. This week, I want to talk all this week by explaining what's going on now, but more importantly, what's going to happen next year. Right now, the economy is pretty strong. Many indicators are showing strength, but others are collapsing. I'm going to show you some charts this week that sum up the current economic situation. And all of these are from haver.com, Haver.com. Great site. You should go there every day. The first chart is personal consumption expenditures, and it shows the plunge in the COVID crisis and then the skyrocket as government checks flowed into people's pockets and they saved the money, not spend it, saved it. But things then started to look better this year, and people started to spend the money that they had saved from their government checks. PCE jumped 25%, a number I've never seen. But partly that jump is based on basing a year ago. In other words, it's comparing to March of last year, April of last year, when things were, dead in the water, really. So last year, extremely negative. We're 25% above that. You see what I'm saying? It's strong, but compared to very weak. Now let's take a look at the most recent data, though. PCE is coming down hard. Partly this is a result of basing it from the middle of last year when things were not so bad, or getting better, I should say. But the issue is that the important thing is that the increase in PCE is looking like it's over. People are starting to pull in their spending. Hey, the eviction moratorium is over, and there's going to be no more stimulus checks coming. So people are starting to save and starting to be more prudent again. The point is simple. The consumer is not going to be very supportive of the economy going forward. Their purchases will stagnate. Now here's the biggest reason, and I'm going to show you this one here. This is personal disposable income. So after you paid your rent and your food and your car payment, whatever's left over is disposable income. It's income that you can do whatever you want with it. The stimulus checks are gone. So this also argues that the economy will weaken because personal disposable income is plunging. Once again, remember the base of a year ago. That modifies this to a certain extent. Now tomorrow, I'm going to tell you exactly what the Fed is going to do about all of this. Will they raise interest rates? When will they raise interest rate? So be sure to watch tomorrow's video. Talk to you later.